Thank you, Case. Thank you, Next Vision. Thank you, James Rankin of Moody Insurance Group. Here we go for Annuity 101. Now, here's what I need you to do. I need you to think as we go through this presentation. This is a generic presentation. This is designed to get you comfortable with the annuity concept. And James, feel free to jump in. You're on mute right now, but you always have a great commentary as we go along the line. But to get the most out of this Next Vision is think about that client. Think about that potential recruit that you're talking about financial planning about. Think about your family, friends, church family that might benefit from what you're going to come to learn. And ultimately, what we want you to do is, if you have had success in selling life insurance, you know, basically annuities are the reverse of life insurance. And we'll talk about the problems that you're solving today and the problems that you'll solve tomorrow. Now, here's a simple way to introduce annuities with the people that you're working with right now. I've expanded our practice to include savings and retirement income services at no charge. You know, and that's the beauty of what we do in the financial services industry, particularly with annuities. We offer this great value, and in essence, it's free. You know, when somebody puts $10,000, $5,000, $100,000 in an annuity, you know how much they spent? Zero. Well, what do you mean? Because when they put $5,000 in an annuity, $10,000, $100,000, they still have the $5,000, the $10,000, the $100,000. It didn't cost them a penny to do that. You know, if they bought a supercharged car like James Rankin drives, the second you drive it off the lot, it's worth less. The second you drive an annuity, it's worth more. We've expanded our practice to include savings and retirement income services, but I need to ask you a few questions to see if you qualify. Another way to approach it, I'd like to show you a way to increase your fixed interest returns by 50 to 100%. But I need to ask you a few questions to see if you qualify. Now, there's a little bit of a caveat here, ladies and gentlemen. I'm going to show you the magic of math. If your client is earning 1 at the bank, at the CD, in the money market, and you get them 2, you know what that is? That's 100% increase. Now, I'm trying not to be facetious here, but in general, annuities will deliver a better return over time than traditional fixed and safe money alternatives. So you can do better for your clients over time with annuities. Another way to approach it, I can show you a way to protect your retirement from losses, but I need to ask you a few questions to see if you qualify. By the way, we'll get to those questions in just a little bit.
Yeah, Paul, let me share something with you real quick. I love what we're doing here. The key is engaging your client. What's unique about annuities is that you already have annuity prospects. You agree with that, Paul? They already have life insurance. And so by incorporating that with your existing book, you're going to be able to pivot and help those individuals. One question that I've used successfully, and I'm telling you, it will open up more doors than anything you'll hear, I hope. And Paul, I hope you can confirm this. I love to ask a client this simple question because it works. Let me ask you a question. What are you doing with your interest? Are you compounding it or are you using it to live on? And most people say compounding. And then you ask them the question that knocks them out, and that is, why are you paying tax on money that you're not using? I can show you a very unique way to take interest income right off your income taxes. And I'm telling you, they will meet with you. Because who would not want to save taxes, especially considering tax rates are going to be increasing? Back to you, Paul.
That's great. Yes, and annuities are a tax-advantaged savings vehicle. And similar to that, James, this is right in line with what you just said. Are you happy with the returns on your CDs, money markets, and savings? Are you considered Are you concerned about the risk of loss on your retirement accounts? And have you established a guaranteed income plan yet? So those are 3 additional questions that you can engage people in. You can help solve their problems. And speaking of problems, you only have 3 problems. You thought you had more. You only have 3 problems: dying too soon, living too long, and getting sick along the way. That's it. Everything else is just trivial. Dying too soon, living too long, and getting sick along the way. And your commitment at Next Vision to service, to helping people, is very critical. Dying too soon, you know the answer to that: life insurance. Annuities help address the problem of living too long. So, I like to say, I got you if you die too soon or live too long. They're basically, an annuity is a life insurance policy reversed. And, there may be only one thing worse than dying too soon, and that is outliving your money, running out of money before you run out of time. That's quite powerful. And then you have the concerns about health insurance, long-term care. Your practices may touch upon that. Indeed, annuities can provide some of those benefits as well in terms of income riders that double for long-term care. So we have some ways of supporting that. I know, Case, on the life insurance side, you're addressing those concerns with the new kind of life insurance that you have from your life insurance carriers that have living benefits and accelerated benefits. So you're addressing those. Annuities address the chief concern of living too long and not outliving your money. James.
Absolutely. That's a perfect point. And what I wanted to do is expand on that illustration, because if you think about it, when your clients are buying life insurance, how do they pay for it? They pay for it on a monthly basis, don't they? And then at the end, there's a lump sum provided for those beneficiaries, which, by the way, is another opportunity for you to make a sell. Now, we'll get into that later when we talk about client meetings. But all of your life insurance are future potential annuities. Think about it. They're going to get a lump sum. Why not put some of that into the annuity? Now, as I mentioned, you're paying for life insurance on a monthly basis, and you get a lump sum at the end. Annuities are the reverse of that, like Paul talked about. You're starting with the lump sum, but we're going to pay them income for as long as they live. So that is really the definition of problem of living too long, is we're going to have income for them for as long as they live. Thanks a lot, Paul.
So here's what I say, and James says it as well. You insure your car. Everybody assumes that. People go out of their way to buy car insurance. You insure your house. No one would think about buying a house or owning a house without having insurance on it. Well, why not insure your retirement? An easy way to understand annuities. Annuities are insured retirement plans. Makes all the sense in the world. Now, I want to give you some tools to discuss and present annuities in a pretty simple way. And that's playing a game. Tic-tac-toe, or tic-tac in the case of annuity sales and commissions, tic-tac-dough. So keep that in mind. And really, in the spectrum of places your clients and friends can put money, they have the safe money alternatives, CDs, money markets, and things like that. What do you get? What's the advantage? Safety. What's the trade-off? Low interest. Now, on the other hand, market-based, equity-based investment stocks, mutual funds, and the like, those have growth potential. They're great, but they also have risk of loss. So doesn't it make sense to split the difference? And that's ultimately what a fixed index annuity and a fixed rate annuity can do. It will provide you safety as well as growth potential without risk. And that's the advantage of the annuity, and really why it should be part of most people's financial picture. Now, I'm not going to say it. James is not going to say it. You don't want to have all your eggs in one basket, but this is one of the eggs that many people should have, basically ensuring their retirement with annuities. Let's talk about another way for you to think about annuities, and that's the Annuity Treasure Map. And these are events in people's lives and the people that you know, your friends, your family, your clients, your prospects, your potential recruits to Next Vision. You know, they have CDs and money markets that aren't earning much. There is a lot of disruption in the economy right now with job changes. And when they have a job change, that puts their 401k money in play. And most people don't know what to do with it. Certainly don't spend it now. You want to keep it protected and grow over time. They also have IRAs, mutual funds, that sometimes may be subject to risk, and certainly has not been positioned to an income plan. And this is what we can do, and this is what James Rankin of Moody Insurance Group can do for you. Next Vision is provide you with guaranteed income plans. You know, there's tax refunds, there's windfalls, there's things coming out. They may already have a life insurance policy with cash value. Did you know that you could 1035 that value into an annuity, tax-free? Pretty cool. You can exchange an annuity, one annuity for another, get a better, new and improved plan, and ultimately provide them where X marks the spot, where the true treasure can be found, income for life that they can't outlive.
Paul?
Yeah.
I was going to share also with, in case we have put together a piece for your team called the 30-point checklist for annuities. And it's just a wonderful opportunity. Paul, you brought that up as far as working with clients. What we're doing basically, if they already have an annuity, you still want to meet with them, but then you can go over that checklist and you can show them how that annuity can be better served with National Western, with all the innovations that we're going to talk about as well. Thanks.
So let's go over the annuity product itself, the annuity policy itself. What do we offer? Well, James opened up with this. Are your compounded returns taxable or tax deferred? Annuities are tax deferred. And that's one of the advantages over other safe money places, is that you have that tax-free or tax-deferred advantages. Now, I want to emphasize this, and this is how I'm going to do it. Annuities are long-term. They're ultimately either long-term savings vehicles or ultimately long-term retirement vehicles designed to deliver retirement income. This is not a mistake. Annuities are long-term. It's not your checking account. And so sometimes that's a trade-off, that you're making a longer-term commitment with the annuity contract for sure, but you're getting so much more benefit from that commitment. But ultimately, they have liquidity as well. Now, this is a key concept to understand. And James, I'm going to bring you on because I think you understand this concept so well, and that is the interest is triple compounding. You know, this is something that we learned from Bill Harris.
Yes.
And if you want to tackle it, go ahead. I can tackle it as well.
Well, it's just a great way to express yourself to the client. Remember, you're educating your client, and many times they're going to tap in on your enthusiasm for this product because you are doing them a favor. You are putting their savings dollars to work. And what we often say is most of the money you have short term is unemployed, which means it's not growing. Actually, it's going backwards. Now, as we get into presentations, we're going to show you a presentation that's netted out millions of dollars of annuity sales. And it's called the real rate of return. And we'll do that in that third session, Case. But in talking about triple compounding, I love that because you want to talk concept with your client. You don't want to talk products. It's all concept. So what I like to tell clients, and we do this in presentations, is just like your CD, you have principal earning interest, right? and they can identify with that because we're not asking them to change the composition of money. It's still dollars earning interest. So just like with the CD, the annuity will earn interest. And just like a CD, you're going to have compounding. Compounding means that interest earns interest. But this is where annuities are entirely different because they have triple compounding. There's an element that CDs do not have, and that's this. And this is powerful, so please don't miss this. We now have the ability to earn interest on money that was otherwise paid in income taxes. Now watch this. And when you tell your client this, you'll see a response. You tell them, do you realize when you pay income taxes, you lose all interest earning ability of that money forever. So we want to put you in a tax controlled position. You determine when you pay the taxes because under Section 72 of the Internal Revenue Code, you can compound tax deferred for as long as you want. And that empowers people. And that's effective. Thank you, Paul.
Great, and great explanation. Triple compounding, interest on your interest, and interest on the taxes you would have paid if you were not in this tax-deferred vehicle. Now, annuities do have surrender penalties. So keep that in mind that, again, it reinforces the long-term commitment to that. And that long-term can be as little as 5 years, 7 years, 9 years or so. But they do have liquidity, ways to get money out on a regular basis over time. And there's also a death benefit. If the client passes, then the full value of the annuity is inherited, passed on as a legacy without any penalty.
Paul, can I share something with you real quick? Because you, and basically you've shared this a lot, and we'll go into it more when we talk about the products. But can you believe we actually have an annuity product that has an accidental death benefit on it? It's one of a kind. So if you have a client that you can't get insurance for, that could be a backup. Now, granted, it's got to be from an accident, but still, that is something unique. Paul, do you want to expand on that?
Well, I think we'll probably get to that. But, you know, in terms of death benefits, James, yes, we have that. We have the accidental death benefit on a couple of our products. We also, in terms of a life insurance alternative, many of our products have bonuses. And, you know, the advantage of life insurance is the leveraging of the money that you can get. A little bit of money buys a lot of death benefit. Well, similarly, our products with bonuses, you can get bonuses of 1%, 2%, 5%, 7%, 9%, and with an additional rider, bonuses of 10% and even 14%. And that is real money. Now, not to quite the same leveraging as life insurance, but you have that advantage as well. Now, let's talk about interest, James. You know, we had different ways, you know, but, you know, explain what interest is. Well, I have a simple way of explaining it. Interest is rent on your money. And, you know, if you had an apartment building and you had multiple apartments that you were renting out, well, if all renters were equally qualified, wouldn't you want to rent to the people that would pay you the most rent? Interest is rent on your money. The banks, the CDs, they're not paying you much rent. The annuity company will pay you more rent on your money. It's as simple as that. And that's an easy way to get that concept that James talked about. So let's talk about interest even further. How much interest are you going to earn? How long is it going to get paid? Is it fixed or enhanced or fixed indexed? In other words, is it just a set rate, almost like a CD alternative? And James, with the Moody Insurance Group, has some traditional fixed rate, we call them multi-year guaranteed annuities, that compete quite favorably with the CD. We at National Western Life offer what I like to call enhanced, which is fixed indexed, which is the interest rate is linked to the performance of an index with the expectation and goal of delivering more interest over time. Also understand that there are base rates, initial rates. There might be a bonus rate associated, and then usually there's a guaranteed rate or guaranteed minimum over time. So those are all the interest rates. Now, fixed indexed interest, that's what we have to offer at National Western Life. And, again, we're trying to take things and simplify them for you so that you have annuity confidence. James, I love that term, annuity confidence, in talking about this. Again, remember, annuities are the inverse, the reverse of life insurance. Dying too soon, you understand protecting there. Living too long, that's what annuities do. So fixed indexed interest is fixed interest. And it's calculated by a formula. And we give you the formula. We tell you that you're going to participate in the index at 50%, 60%. You're going to get all of the index up to a cap. There are different terms, but we tell you how we measure it. You can track it day to day. We use all kinds of different indexes, but mostly the S&P 500. But ultimately, the intent is to beat traditional fixed rates that they earn at the bank, at the CD, the money market, their checking accounts, which are earning hardly anything, by 1 to 3%. So set the expectation properly. We are not trying to equal or beat the market. We're trying to get a better safe money return for your clients. Liquidity, 10% penalty-free withdrawals, typically. Those are found in our plans. You can get interest withdrawals, whatever interest you earn this year, you can take it out and in essence keep the principal in place and earn interest on that. There's also a concept called required minimum distributions. That's for qualified money, like an IRA. Now today, if you're age 72 or older, you have to take mandatory distributions. We offer those. And even on older clients, if they need to take an RMD right away, we let them. No surrender charge. Major life events. We talked about that in terms of the accidental death. That's a pretty major life event. But we have a medical stay waiver. We have a nursing home doubler. So life events can trigger bigger payouts. And then also annuities, and our annuities in particular, have a policy loan provision as well. So there's really lots of ways to get at client funds when and if they need them. Now, surrender penalties. And James, I might bring you back here because, again, I borrowed from Bill Harris. And he talks about this, and you may remember this, so I'll kind of set the stage for you. Surrender penalties are good because really, unlike most financial instruments, a surrender schedule tells you exactly what the value of that annuity is going to be.
Sure.
You know what the value of your stock account's going to be, your mutual fund's going to be in 5 years? You have no idea. It could double or it could go to zero because of the risk of loss. So, James, I want you to talk about how surrenders are guaranteed redemptions.
No, absolutely. One of the things I also like to point out, and this is something that we've used quite a bit with life insurance selling, and that is the reason typical savings plans do not work for people is they have what they call put and take type savings. You put your money in, but you can take it out so easily. It never has a chance to grow. So I say surrender penalties are a huge benefit because it's not the first place you go if you need money. You're going to go to your savings account, you're going to go to your CD, you're going to go to other monies, and you're going to let this one grow. And that's why it will accumulate. It'll be the money for you later on. Now,
Right.
while we're on that subject, real quick, whenever you're talking to your client, and this is powerful, you tell them that sitting in front of me is a 45-year-old person. But inside that 45-year-old person is an 82-year-old person. And the only money that 82-year-old is guaranteed to have is the money that the 45-year-old is going to send ahead on their behalf. this is a great place to store the money, to grow the money, and later on pay out that senior citizen, which, by the way, is you. I just think that's powerful. And what you want to do is you want to move your clients. So many people were analytical. That's left brain. When you get them thinking about themselves and get them emotionally involved, you shift to right brain, and right brain is where they take action. And you know that in your own career. So I try to get them to analyze things, but then shift them over to right brain thinking, and that's where they'll take action. Now, Paul, getting more specific to your analogy here, you want to ask them, if you had a $10,000 CD and you bought it today and you needed the money in 10 years, how much would you get? And let them answer that. Well, it depends on the market. It depends on what's happened. Exactly. Okay, same thing with real estate. You buy a piece of real estate that's worth $250,000. How much could you sell it for in 10 years? Well, you know, look at the tax rates. It looks like things are increased. But I mean, how much could you be guaranteed to have in 10 years? You don't know. How about gold? Everybody says gold's a great investment. Yes. How much is it worth in 10 years when I really need to have it? Annuities can give you that. No matter what happens in the market, you know, guaranteed what you can get in that period of time. And what we do is we typically look at the interest rates and the guaranteed rate, and we can guarantee what will be there. Now, if they say they need the money in 2 years, I'm going to tell them the annuity's not for you. Why? Because, Paul, you alluded to that earlier. Annuities are long-term investments. If you're going to need your money in 2 years, this is not the vehicle. Let's look at something else. How's that, Paul?
You know, I love that. I love that. You know, you're paying your future self. So here's something to remember, Next Vision associates. An annuity is a money time machine. An annuity is a money time machine that you transport money to your future self. Imagine that. Now, we talked about, well, you know, annuities are long-term contracts. Well, you know, in reality, we have products. James and his team at Moody Insurance Group has 5-year products, 7-year products, 9-year products, 10-year products. But even at that, a common criticism of annuities that you might hear, oh, I don't want to tie up my money that long. It's too long. Somebody told me on the radio that annuities are bad. You know that some of the savviest people, some of the wealthiest people, you know what they do? They have money in annuities. I'm not going to reveal any names, but it's very common for National Western Life. We do some big time annuities on sports celebrities, people that you know, name brand type of people. I can't reveal that. It's confidential. But you know, an athlete has a limited window of earning capacity. And if they have the right manager and the right financial advisor, often they will take that signing bonus. They'll take a good portion of that income and they'll put it into an annuity so that when that athlete is 60, 65, 70 and not running down the field and not dunking on the basketball court or hitting home runs anymore, that they'll have a dignified retirement. So think about that. Now, let's look at in comparison to other common financial instruments that people own. How long is your mortgage? Typically 30 years, maybe 15 years if you've been financing. How long is your life insurance contract? You know, if you're 30 years old and bought a life insurance program, you know, you might have bought 20-year term, ideally 30-year term, permanent policy. You know, you want your life insurance really to last as long as you do, don't you? How about savings bonds? Those are typically 20 years in the accrual phase. And I get this is what I love, CD rollovers. You know, some people go, well, I just invest short term. Well, if you have been rolling over your CDs, all you have been doing is paying taxes along the way and not getting rewarded for long-term behavior. Annuities reward you for long-term behavior. So for that CD buyer, it's like, well, how long have you been doing that? Oh, I've been rolling over my CDs for 15 years. They're not getting rewarded for long-term behavior. How long do you want your 401k to be in place? If you're 25 years old, you can't get that money without penalty until you're 59 and a half. Again, you want your 401k to last as long as you do. So how long is your annuity? Well, we have contract lengths anywhere from 5 to 15 years, depending upon the design of the product. So in comparison to, again, the behavior that most people engage in, an annuity is a relatively short-term financial instrument. It doesn't matter. How long would you like to protect your savings from creditors, avoid probate, and defer taxes, get that triple compounding? How long would you like to do that? James, I want to bring you on. How long would you like to do that?
How about forever?
Forever. So that's the key. Now, let's address another question that comes up. But are they FDIC insured? I love this question. The answer is no, by the way. They don't need to be. Now, let's put it in perspective. Banks have FDIC insurance. That's the Federal Depository Insurance Corporation. They have it because of the risk of failure. You know, banks just don't voluntarily have FDIC insurance. It's mandatory. Insurance companies self-insure, and there are state guarantees as well. Banks cannot honor all accounts. So get this, now understand this relative to banks. And this is the reality of it. Remember, and I'm not, I have bank accounts. Well, you need to have bank accounts to do this. Maybe you just do PayPal. I don't know. But if everybody showed up at the bank today, the bank would have to close because they do not have all of their account holders' money. It's not all back in the safe. It's loaned out. It's spent out. Banks have what's called a margin requirement where they have to keep some money on hand, but generally it's all loaned out and all over the place. So if we all showed up at our favorite bank, they'd be in trouble. Now, if you all showed up at National Western Life at the building behind me, insurance companies can honor all accounts because they have a much higher reserving requirement based on state mandates in terms of their liquidity, in the terms of their capacity. So insurance companies are probably one of the strongest places, and of those, National Western Life may be among the best.
Absolutely, Paul. And I want to share something too. The key to successful selling is have all the objections out. You know what they're going to ask you. We'll share with you the objections we hear from people over the last 40 years. So you're going to get some great insight with that when we get into the selling aspect of it. But what I used to tell people, and I still do today, is that important to you? And if so, let me show you how much you're paying for FDIC insurance. You're paying a lot of money. For instance, if they had $100,000 and there's a 1% difference between our rate and the bank's rate, they're literally paying $1,000 to feel comfortable their money is safe. And that's why we'll get into the financials of National Western. So you'll know you've got a very strong company with very strong surplus, because that tells you the health of a company. Thanks, Paul.
Now, the death benefit, pretty straightforward. You get the accumulation value, the value of the account. You're familiar with this from your life insurance practices. We could pay in a lump sum, or we could pay it out over time. We could even make a lifetime payout of that death benefit to beneficiaries. Now, I want to get you to understand the balance of benefits in an annuity. And that is, generally, the longer the term of the contract, how long do you want to commit to the contract? The more and longer the surrender period, the contract term, generally, the more benefits you can get. So I want you to understand that. You can get more bonus, more features, more liquidity even, as the length of the contract goes. Because the insurance company, the longer you commit to the insurance company, the better, typically, they will commit to the policyholder by way of benefits or a bonus and so on. So that's why you'll see, for example, we have a 7-year product that offers a 5% bonus, for example, but the 10-year version of that offers a 7% bonus. Again, that's the Annuity Seesaw. So trying to help people visualize and understand the differences among products. So let's talk about some other features about annuities, just the contract itself. And again, we haven't gone over any particular product. These are attributes of most products out there. They avoid probate. You don't have to validate the will, go to a judge. The annuity contract will be paid on demand to the beneficiary of that contract. In many cases, in most states, the value of an annuity, since it's designed for a retirement vehicle, is protected from creditors. Just a good place to have your money. It won't reduce Social Security. Now, this is a little bit of a nuance. You know, if you're of retirement age and getting Social Security benefits, there's a limit on how much you can earn. If you went to work, you would start to pay taxes on your Social Security. Now, contrast that. You could make as much money as you could with an annuity, and those gains in the annuity contract will not count against your Social Security benefits. Might help with other state programs. Our purpose here is not to be experts in this subject, but again, because it is a sheltered vehicle and because you can transform it to income, could help qualify for other programs. You always have all of the money at work. Even the best mutual fund with low fees, you're always paying a fee for that fund, 50 basis points, 100 basis points. And that's not even accounting for what you might be paying the advisor for his or her services. So when you put $100,000 in a mutual fund with the 1% management fee, that means they take $1,000 off the top, $99,000 at work. And that's a low-cost mutual fund, not accounting for maybe the advisor's fees. So, in a lot of investments, you could have 1 to 3% coming off the top every year. That's not the case. With an annuity, all of the client's money is at work from day one. Now, ultimately, what you can do with an annuity is 7-proof your savings. Tax-proof because they're tax-deferred. Probate-proof because they bypass probate. Creditor-proof because in most states, even if you owe people money, if you're subject to a lien, they can't tap into your annuity. Social Security proof, as we said, relative to the earnings within an annuity. Nursing home proof in terms of helping potentially to qualify for Medicaid. Compensation proof. We're not taking anything off the top. All of the client's money is going to work for them. And then ultimately, the true value of the annuity contract, the time machine for money, is they are loss proof. You cannot lose money in an annuity. So remember the questions that you're going to ask. Are you happy with the returns on your CDs, money markets, and savings? If you are getting compound interest, as James said, would you like that to be taxable or tax deferred? Are you concerned about the risk of loss on your retirement accounts? And have you established a guaranteed income plan yet? Remember, annuities are insured retirement plans, and that's the advantage of it. Couple of examples of what you can do today with National Western Life products. Instant market recovery, instant value that you can provide, bonuses, fixed rates combined on our leading products, anywhere between 10.79%, 8.76. You can do this today. 7.10, 3.68. So these are real life returns. They can help you recover losses if you suffered a loss, or enhance the gains that you've already enjoyed this year? How about income values? And we're not going to do an income presentation. We've kind of combined a couple of different things, the basics and then some particulars of what National Western Life has to offer. But look at the guaranteed growth that we can do for income value with the various products that we have to offer. Over 1 year, double-digit returns for income. Over 5 years, look at that, 39, 36. These are guaranteed values, ladies and gentlemen, that you can deliver today to people that you know. So let's sum up. What you have with annuities: potential better returns on your safe money, less risk to your retirement funds, and guaranteed income for life. Isn't that what you want? That's what you can get from National Western Life. That's what you can get from James Rankin of Moody Insurance Group. And that's what you can get thanks to Next Vision Financial, Case Vang, and his willingness to let us get on your platform to help you be more educated about annuities. James, let's wrap it up.
No, that's fantastic. And once again, Case, it's an honor to work with you and to work with your team. And like I said, it's all focused on National Western, none other product. We promised you just National Western is our focal point. Also, Paul, if we can, we're going to combine 2 sessions into one, but let's just have a frank discussion. If you have some slides too, if not, that's fine. Let's talk about the strength of National Western Life, because I think that's very important. It's a great company, and I know, Case, you're going to come see us up in Austin, so we look forward to that, and maybe we can even do an incentive trip of some sort that we can talk about later. But as far as the strength, I think you're going to really enjoy how National Western has evolved. They've been around, was founded really in 1956, right, Paul?
That's correct.
By my mentor, Robert L. Moody. Actually, Moody Insurance Group was founded by his son, but Mr. Moody founded National Western, and he's a great man. He's done a wonderful job, and we're up to $12 billion in assets, right, Paul?
That's right. I'm going to kind of put the numbers up for people that want to take a look at that. And these are financial highlights as the end of the statutory year 2019. So National Western Life in and of itself, almost $11 billion in assets. About this time now, we're closing in on $12 billion, as James said. We have $9.2 billion in total liabilities, and this is really critical to understand. What that means is, if everybody died today, if everybody cashed in their annuity today, we would have $1.6 billion left over. That's what's called your capital and surplus. That's why insurance companies are such a stable place to have clients' money. Insurance companies have to have more than what they owe their policyholders on hand, liquid or near liquid, that they can cash in within a relatively short period of time to pay benefits. I want to say that again. At National Western Life, we could pay every claim, every annuity, and have $1.6 billion left over. James.
Yes, I would say that's about 3 times what is required in the industry. You want to address that?
That's correct. So, that capital and surplus ratio is what we call 12%. In essence, we have 12% more on hand than necessary to pay our customers. Typically, you'll see the capital and surplus ratios of even the best companies, all the great ones that you're working with on your life insurance side, it's typically around 5%. We are one of the strongest financial institutions in the country. And that's why Case has brought us to the platform, because of that stability, because of that ability to do that. In fact, I understate our capital and surplus. It's almost 15%. The ratings are strong, James, as you know. A with AM Best, A- with Standard & Poor's. And more importantly, it's the numbers that you look at. Again, I want you to have every single confidence in working with National Western Life. Almost 97%, really, I'm sorry, 99% of our portfolio, our investments are of the highest quality or high quality.
That's exactly
We have
right.
no junk bonds. We have very little mortgage exposure, but we're expanding on that to get a better return. 89% of our portfolio is investment grade bonds. So again, really stable, really conservative to a certain extent.
Yes.
So you can count on us being there today, tomorrow, and when that annuity time machine arrives to that 79-year-old future self, delivered from the 45-year-old today, that will be there to provide those values, guaranteed income, thanks to what you did introducing your clients and prospects to the annuity time machine.
Absolutely. Thank you, Paul, very much. And I'd like to turn it back over to Case. Case, are there any specific questions? And then also, you know, I always say feedback is the breakfast of champions. So give us your feedback on today's session. Did it meet your expectations?
That was great, Paul and James. That was awesome. Let's open up the floor to see if any of the agents have any questions on the PowerPoint information there.
Yeah, absolutely.
Okay, guys, do you have any questions or concerns? Now's the time you can ask James or Paul.
Questions show interest. I've always said that. I'm joking. Hey, I do see a friend of mine on this call, so good to see him, and I hope that he'll say hi. Mr. Feng, how you doing?
Hello, James. How are you?
Hey, good. Thank you for joining us. And like I said, what were your thoughts on the annuities?
Well, I just want to first of all thank Case for hosting this training. But I just want to let everybody know that you guys are receiving world-class training from Mr. James Rankin and Paul from National Western. I've learned a lot from James and his team, and I think if you pick up on the wording that he uses and the question that Paul and James shared, those are golden. I think those will help you close your sales very well. So I just wanted to thank them for their time and for sharing their expertise with us. So I would highly encourage everybody to take good notes, which I certainly did. I always learn something new from them. So yeah, thank you for giving me the time to say hi and to give my thoughts.
Absolutely. Appreciate it. Thank you.
All right, thank you, Tua. Any other questions, guys, before we close it down? Okay. All right. Thank you, James and Paul. That was an awesome job, and looking forward for the next session next week. So today we went over the introduction to annuities and onboarding with carrier. Next week we will be talking about product knowledge, illustrations, and riders. So guys, don't miss next week. Come back here next Wednesday at 3 p.m. Central Time, and be ready for the next training sessions. Okay. So thank you very much.
Thank you. Take care and God bless.
Thanks.